Let's kick off this explainer by looking at a company that is pulling off one of the most fascinating transformations in the market right now. We're talking about Chunghwa Telecom. When we think of telecommunications, we usually just picture our monthly phone bills or home Wi-Fi. But what happens when a massive, traditional utility-style company decides to completely rewrite its DNA and plant itself right at the center of the global AI supply chain? Well, that is exactly what we're going to break down today.
Here is a quick look at our itinerary. First, we'll hit the Q1 2026 financials, then dive into those AI and ICT engines, look at shareholder value, touch on ESG leadership, and wrap up with their future outlook. All right, Section 1, Q1 2026 financial snapshot. And let me tell you, the momentum here is completely record-breaking. We've got to start with this massive number, 59.99 billion new Taiwan dollars. That represents their total revenue for Q1 2026. To put that into perspective, it's a 7.5% jump year over year. And honestly, more importantly, it hits a record high for any first quarter since 2012. So we aren't just looking at steady, incremental utility growth here. This is a legacy company finding a whole new gear. Now, what's genuinely wild about this is that they didn't just barely scrape past their revenue targets. They completely swept every single key financial indicator on the board. Revenue, operating income, net income, earnings per share, every single one blew past the absolute high end of their own internal guidance. It is incredibly rare to see a massive enterprise beat their own optimistic estimates across the board like this. And just to ground this in reality, the foundation for these numbers comes straight from the Independent Auditor's Review Report by PwC. So this isn't just slick corporate spin. These are rigorously audited financials, confirming the sheer scale of their Q1 outperformance. Let's move on to Section 2, which really uncovers the why behind these numbers, the AI and ICT engines. When we break down that revenue, you can clearly see the massive contributions from both the consumer side and the rapidly expanding enterprise business group. The consumer side pulled in $36.73 billion, which is a really solid 6.2% increase. But look at the enterprise side at $18.81 billion. That segment is growing at an even faster 8.5%. The whole makeup of their revenue is actively shifting right before our eyes.
The crucial takeaway here is how these two engines work together. You've got the consumer business providing this rock-solid stability, largely driven by steady broadband usage and really strong iPhone demand. But then you pit that against the enterprise business, which is delivering absolutely explosive, record-high order intakes. That enterprise segment is where the information and communication technology, or ICT magic, is really happening. And the specific drivers for this growth are just phenomenal. I mean, get this. June's ICT revenue alone shot up by nearly 50% year over year. A massive chunk of that came from successfully delivering AI supply chain projects over in the US market. Yeah, you heard that right, a Taiwanese telecom exporting its cutting-edge tech infrastructure to the US. Plus, their cybersecurity revenue literally doubled compared to last year, thanks to huge rollouts for national fiscal and public surveillance systems. They aren't just providing internet, they are securing the infrastructure of the future. Okay, on to Section 3, shareholder value and dividends. Let's see how this trickles down. Because that's the ultimate question, isn't it? High growth is fantastic on paper. But how is Chunghwa translating all this AI and ICT dominance into actual tangible value for shareholders? Are they hoarding all that cash, or are they returning it? Well, the answer is this staggering 104.2% payout ratio. By actually paying out more than their pure net earnings for the period, they're signaling immense confidence in their operational performance. They're generating so much free cash flow from their day-to-day operations that they can comfortably reward shareholders at this massive scale without starving their future AI investments. It's a real win-win. That ratio translates directly into a very healthy NT dollars 5.2 cash dividend per common share, which was officially rubber-stamped at their May 2026 annual general meeting. It's a direct reward to investors backed by the company's record-breaking operational momentum and that core telecom stability we talked about. If you want to know exactly where that financial flexibility comes from, just look at their consolidated cash flow statement. They ended the first quarter sitting on a massive war chest of over NT dollars $35 billion in cash and cash equivalents. Having that kind of capital lets them aggressively pursue those high dividend payouts while simultaneously pouring money into capital-intensive AI and next-generation network projects.
Moving to Section 4, ESG and sustainable leadership, because they're also going green in a big way. They are legitimately leading the charge globally here. Chunghwa is maintaining a top-tier AAA rating from MSCI, putting them among the absolute best telecom operators in the world for environmental, social, and governance practices. But what's truly groundbreaking is that they are the very first company in Taiwan to fully adopt the rigorous new IFRS S1 and S2 standards for their sustainability disclosures. They aren't just paying lip service to going green, they are meticulously measuring it against the highest global financial standards. Finally, Section 5, Future Outlook and Guidance. What does the rest of 2026 and beyond actually look like? I absolutely love this quote from Chairman Chi-Cheng Chen, where he highlights their sea, land, satellite, and sky deployment strategy. It perfectly captures the wildly ambitious scale of their future networks. They've moved way beyond just laying fiber optic cables in the dirt. We're talking submarine cables, satellite communications, and a total sky-to-earth connectivity blanket to ensure absolute digital resilience. To pull this off, they are executing on 6 highly structured growth drivers, all anchored by a bold internal initiative they call Chunghwa AI Ignites the Future. From pushing AI applications into enterprise software to building next-generation networks and creatively revitalizing their existing assets, it's a remarkably clear, step-by-step roadmap for shedding their traditional telecom skin and becoming a fully integrated tech ecosystem. And looking at the numbers, they are confidently forecasting full-year revenues to land somewhere between NT dollars 241.99 billion and NT dollars 243.68 billion. Considering they already hit over 121 billion in just the first 6 months, this represents a really solid 2.5% to 3.2% year-over-year growth on a massive baseline. It proves that this dual-engine strategy of consumer stability paired with enterprise ICT growth is just firing on all cylinders. So I'm going to leave you with this thought to chew on. When a traditional utility-style company successfully pivots to the bleeding edge of the AI supply chain, builds massive enterprise cloud and cybersecurity projects, and still manages to maintain a 104% dividend payout ratio, shouldn't we fundamentally change how we value it? Are we still looking at a telecom company, or are we looking at the technological backbone of the AI revolution? Thanks for hanging out with me on this explainer, and I'll catch you on the next one.